I'd like to discuss some of our history. I recall when you were chairperson of the California Senate Banking and Insurance Committee that there was legislation. I was then insurance commissioner. We were trying to hold insurance agents accountable for their actions, that they owed to their customers their best good faith effort, and that they would always deal in the interest of their customers, not in their own personal interest, not in the interest of the insurance companies, but rather in the interest of their customers. That is one of the fundamental things that you described that was taken away in the mid-2000s, so that as you were saying, the financial institutions no longer had any obligation to their customers, but rather to their bottom line. Is that the case?
That's correct. So you have your agent your broker, I should say, at any one of the brokerage firms, and you think they're actually there trying to find good deals for you to invest in. What you don't know is that many of them are captive, much like in the insurance industry, where they only sell certain products. So you're not getting the panoply of opportunities that you deserve. And furthermore, you don't know what fees they're getting. They might be getting more fees if they sell this particular product, so they promote that product, and not other ones that may be safer and maybe more inclined to provide you with the kind of security that you're looking for.
There ought to be a law.
There ought to be a law. You're absolutely right.
There ought to be a law that holds these banks to the highest possible standard, that they owe to their customers their best knowledge and information, and that they don't double deal. It's the double dealing that's going on. That's what's the current SEC lawsuit against Goldman Sachs. It's about double dealing. On the one hand, they're here. On the other hand, they're there. They're playing both sides. That cannot allow the cracks that you talked about there, particularly the Glass-Steagall repeal in 1991, really opened the door to not only the kinds of terrible meltdown in the housing market and the collateralized mortgage obligations, but also the loss of trillions of dollars of value that people held in their assets, in their portfolios, in their 401ks, which we now know as 201ks, in their homes. We lost 8 million jobs as a direct result of Wall Street's double dealing, of their excesses, of their extraordinary greed. 8 million jobs were lost. 2.8 million homes were foreclosed. Pensions fell by $28 billion, and trillions of dollars of assets, of value that families needed for their retirement, for their ongoing businesses, all blown away. It's time for us, it's time for America to reestablish the fundamental rules of the road that we had, as you said, since the 1930s, since the Great Depression. Clear laws were established that said, if you're an investment banker, all right. If you're a banker, all right. And if you're an insurance company, all right. But you cannot be all three. We've got to go back to those kinds of very strict regulations. Otherwise, this is going to happen again. We cannot depend upon the market to discipline itself.
And in many respects, if the gentleman will yield, it's worse because 10 years ago, there were probably 60 big banks. Today, there are only 5. Because of this financial meltdown and the purchase by many of these banks of other banks, they are now too big to fail unless we take steps to make sure that they are contributing to a resolution trust fund, that there is the basis on which if a systemically risky enterprise is deemed to be so by a council of advisors, that particular entity can in fact be made smaller. Because right now we can't say that nothing is too big to fail, because they're all too big to fail right now.
Well, exactly right. If the gentlewoman would yield back. Clearly, the American financial institutions have worked themselves into a situation that will continue the risk that nearly brought down the world's financial institutions and brought the world into one of its most dangerous economic time since the Great Depression. So we need to move legislation. I know that you're a member of the Financial Services Committee here and that you worked long and hard throughout the summer and fall of last year to put together a comprehensive reform of the financial institutions, one that would rein in the excesses, one that would create transparency, a reform that would create a consumer protection agency. Could you describe some of the work, some of the dealings, some of the things that were going on in the background? Where were, for example, the Wall Street firms? Were they supporting the re-regulation of the industry? Where were the consumers in all of this? Give us a little bit of history from your perspective.
Well, I guess the best way to give you a little bit of history is to tell you that the financial services industry is spending $1.4 million a day right here in Congress trying to convince members not to support the regulation reform measure. So to answer your question, are they supportive of it? You bet they're not, because they want the status quo to continue, because they continue to reap the benefits of the status quo with millions of dollars in bonuses and salaries that they get to take home.
Pretty simple, isn't it? Greed,
follow the money.
Greed. Greed is not good for America. Greed is not good for Wall Street on the long run, because it really brought down this nation to its knees in 2007, 2008. And here's the greed. Here's what we're talking about. We're talking about extraordinary bonuses for Wall Street. This is money that should be in Main Street, not to Wall Street bonuses. $145 billion of bonuses in 2009, when people in your district, in my district, are losing their homes, where foreclosures are going on, where banks are not making loans to small businesses, where we have 20% unemployment in the construction industry, 12% unemployment in the state of California, and they want these kinds of bonuses, and at the same time not making loans to businesses. This has got to stop. That's what this is about. This is about whose side are you on? Are you on the side of the working men and women, the small businesses out there, the local bankers, the opportunity for this nation to come back, or are you on the side of Wall Street? I know where you are.
I know where you are.
Well, we've got some things to do, don't we? We've got some work out ahead of us.